more stable. 15% is assured, subject to 60% the capacity utilization. 15% is assured. Those are more stable.
Okay. Bhupesh, would you like to?
It's more of a regulatory framework. What we are talking about, having the major ports already, the TAM has a structured body which takes care of the tariff part of it also, as well as the benefit for the user and the terminal, the operator or the developer. So that control body is already set in. Whereas if you come across the minor ports which is being operated, rather you can say the authorities like Gujarat Maritime Board, Maharashtra Maritime Board, still it has not come into a structured way of fixing up any kind of rather you can say working out the profit sharing or the business plans, which looks more important for selection of the location or the viability of those projects. It's all open. Wherever the waterfront is there, the certain minor ports have been located. Based on that, the people who are interested to come and develop, that kind of still the regulatory, rather you can say the more of framework for attracting any investment into particular this sector is still not geared up. More of the bigger industrialists like Reliance or maybe Jindal, those are the people who are still eyeing for this kind of things. The small players like Rivas and Digi, who doesn't have the clear-cut business plans as told by Mr. Nikhil Naik and others, still those they have not come out with the business plans. That's why it is not becoming successful. Definitely now Reliance has shared their equity into the Rivas. Possibly they will take up.
See, on this on TAM, one of the I was a trustee in Bombay, JNPT and Kandla, so I've got some exposure to the port sector. What I understand is that one of the major issue, the complaint which people have is that one thing is that it is a cost plus approach, so you're not encouraging the efficiency. I mean, if your cost is more, you would still have to pay less. You can still charge more, there is no problem there. And there is always a demand, so you will always get the clientage. So this kind of approach is not encouraging efficiency. The second thing is that it is also discouraging investment in the government ports, because any person who comes, he cannot charge beyond a point because he is bound by the TAM regulation. Whereas when he invests in a non-major ports, there is no restriction how much he can charge. The market forces will go on. So these are the two things. And then they were also talking of a normative approach. I do not know how far progress we have made. So maybe
a national level working group was formed to bring out a normative level in the container related operations. But that group could not come to some consensus. Normative basis would not be fixed even for container related operations, where we thought that it may be possible there, but the group could not recommend a consensus approach or consensus benchmark for fixation of tariff for container related operations.
No, actually, excuse me, I was a part of the working group,
correct.
And the group actually did come to a conclusion. And the conclusion was that port operations do not support a normative method of.
Yeah.
So they said that the group came to the conclusion that normative methods would not be used. And one thing I must point out here in this discussion, that controlling or regulating tariff, however it is, and attracting private equity is, in my view, a contradiction of terms. You can't do one and have the other. I mean, within limits, of course.
So, in your view, the tariffs, there should not be any tariff fixation. It should be a free market, and depending upon
if we are looking to attract private equity, from the attraction to private equity point of view, yes, of course.
Okay.
I'm not looking at from
one Nikhil, I've always been very eager to know this, but now since you are no longer with P&O, probably you can share some secret. How did P&O manage to get 60% return on equity? I mean, that's a sort of when you have I asked the same question to when you have a 15% return on capital employed, how one can get, and maybe in 3 years the entire payback. on the entire equity. I mean, that's probably the most successful port story anywhere in the world. I don't know whether there's any port terminal which has done so well. So what it takes to make such thing, and what really happened? You can share some of the experiences. And
number one, I cannot share any secret. So 60% is your figure, but I think he answered that question absolutely correctly. It is a prospect, you know, it is a future. You're trying to look at the future, the 3-year future, and it probably only shows what a huge pent-up demand there was, which was addressed by a new private terminal operator coming in the scene. That's really what it shows.
See, the minimum is already fixed as a 15%, and the 60% capacity. Now the capacity can be it can be 150% or can be 200%, depending upon the terminal operator which is going to attract it and make it viable.
That's how you have brought down the cost, which was protected. The cost which was protected, the actual cost is probably lower than that.
Well, actually, it was purely a volume.
Okay.
Volumes were so high.
Right.
I think efficiency also played a big
Yeah.
To give you an example, I mean, P&O Ports profits, net profits were around 100 million pound, and out of which 20 million pound they were getting from Indian operation, and that 20 million, I think almost 90% belonged to, or maybe entire thing belonged to NSI City. And in their report, they mentioned jewel in the crown. You know, that's a sort of thing, and that's what led to large port companies coming in India, and that really shows, and that's really anchored P&O in Indian market, and of course the Dubai takeover and a lot of things which are happening. Now another way some of the private equity players come in. Yeah, please.
I think the other issue, which comes up because of this assured return or this sort of a ceiling kind of thing is, how do you reconcile that with a lot of corporates now bidding, on a revenue share, actually asking for, paying for 50%. I mean, how does one reconcile? On one end you have a fixed thing, on the other hand you have bidding, So where is that spread? Will there be a spread? I mean,
Yeah, well, that's a very interesting thing, because at some end some of the operators have bidded at almost 50% revenue share with the government, and then there is an assured return. But as I understand, the revenue share is not part of that calculation of that 15%.
Yeah, you are right.
Yeah, so because you can't bid aggressively and then expect a 15% return.
Yeah.
So it's neutral to, irrespective of the revenue share. So one of the big challenge in the port sector, especially on the terminal side in major port, is able to match between the revenue share vis-a-vis the capacity utilization and the tariff fixation, and so that's a bit of a conundrum which is there, but still there's a lot of people showing interest, and that's why the greenfield projects like Pipavav or Gangavaram or Mundra become, after they have come to a certain stage and they are taking off, become a much more upside story from the venture capitalist point of view, because they feel that these are the projects where they can really grow very big. Mundra's valuation, for example, port valuation is touching close to $2 billion. I mean, that's what I heard recently. Before would be similar or half of that. So and probably the physical investment which is taking place in these places will be 1/10 of what these numbers are talking of. So it's like a holding model, like real estate. DLF the valuation of 1 lakh crore is not because they have revenues and profits to show that. They have a land bank which is valued at that much. So once you get a port and the land around it, the kind of value which gets generated because of externalities and the future development potential really makes that particular value. But I mean, are private equity people looking at such kind of model? Because I understand a lot of real estate funds are in India, and they are looking to invest in. So port is a sort of a maritime asset as well as a real estate play. But does this, Kabir, I mean, does that attract some attention? How do you look at that kind of business model, which is real estate come port infrastructure? Because there is an SEZ also which goes along with the along with the port. There are a lot of ports which are developing SEZs along with the port facility.